One day, Wirecard was a 24 billion euro fintech giant. The next, 1.9 billion euros simply vanished. No heist, no hackers, just a black hole in the books. What happens when an empire built on lies collapses overnight? This is the untold story of Europe's greatest financial illusion. The Wirecard story's more than just the demise of a business. It's a web of fraud, dishonesty, and a shockingly 1.9 billion euro hole nobody noticed approaching. Once a bright fintech star, it became a full-fledged financial disaster, shocking investors, authorities, and the globe. But how could Wirecard, a business once valued at over 24 billion euros, manage to fool the financial industry for so long? And in what spectacular manner did it all come down? This narrative explores the rise and fall of Wirecard, the largest fintech fraud in Europe, exposing the main players, dubious accounting techniques, and shockingly poor financial management that misled some of the most astute financial brains. Wirecard was more than just another startup. It was a representation of Europe's will to challenge the worldwide fintech giants. But behind the glossy facade was a crumbling empire built on lies. So, how did it all unravel? Let's dig in. Driven by the explosion of e-commerce, the financial industry was humming with the quick turn toward digital payments in the early 2000s. A little obscure German company called Wirecard started to grow during this period. Originally launched in 1999, Wirecard first provided payment processing tools for websites, positioning itself as a solution for online retailers to handle electronic payments. Few could have predicted that this relatively unknown company would soon rank among Europe's most celebrated financial technology behemoths. Even as many fintech startups were blossoming, an Austrian tech visionary, Markus Braun, took over as CEO in 2002. Braun's idea for Wirecard was more broader than merely providing back-end payment options. He saw Wirecard not just as a service provider, but as a future leader in global digital finance, rivaling industry titans like PayPal and Square. Under his leadership, Wirecard went public in 2005, listed on the Frankfurt Stock Exchange. The timing was perfect. E-commerce was about to explode, and Wirecard capitalized on it. Wirecard positioned itself as a revolutionary disruptor in the realm of digital payments as the company's stocks started to soar, fast gathering customers and extending its activities outside of Europe, reaching a stunning peak with its market value exceeding 24 billion euros by 2018. The firm was even included in Germany's esteemed DAX 30 index, which comprised the 30 most traded companies in the nation. The ascent of Wirecard seemed unstoppable. Beneath the surface, though, fractures were already showing up. Among financial analysts, the fast spread into foreign markets, especially in Asia, was drawing questions. The rise of Wirecard seemed almost too quick, too simple, and as we would shortly find out, that suspicion was not unfounded. There were many critics of Wirecard's rise. Whispers of anomalies and unethical behavior were floating about even in 2008. Wirecard was accused at the time of inflating its stock price and falsifying its sales using illicit techniques. But these claims were mostly dismissed. Targeting critics as short sellers or market manipulators, Wirecard's aggressive counteroffensive helped to quiet any worries for the moment. But by 2015, those whispers became louder. Starting an investigative series titled House of Wirecard, the Financial Times exposed grave questions regarding the accounting methods of the company. The accounts claimed that third-party partners in Southeast Asia, where openness in business transactions was famously opaque, were mostly responsible for Wirecard's profits. These partners were allegedly in charge of producing a sizable portion of Wirecard's income. But when reporters sought to confirm their existence, the information was usually elusive and lacking. Still, Wirecard kept expanding under increasing suspicion. By 2018, its market capitalization exploded to almost 20 billion euros. With many investors seeing the company as a rare European success story in the realm of fintech, where American firms like PayPal dominated, the appeal of its success kept investors interested. The financial industry was about to learn, though, that Wirecard's success rested on a mirage. Wirecard's ascent was driven mostly by financial trickery, one that misled not only individual investors, but also auditors and worldwide authorities. The company's dishonest behavior was simply audacious. Revenue for Wirecard came mostly from its so-called third-party acquiring companies, which were supposed to handle payments in areas with high growth, including Southeast Asia, the Middle East, and some parts of Africa. Presumably housed in 2 Philippine banks, the missing 1.9 billion euros would eventually become the center of focus for the scandal. The truth was far more startling. The money simply did not exist. While the executives of Wirecard claimed this large sum of money was deposited in escrow accounts. To hide its actual financial situation, Wirecard created fake income sources, falsified transactions, and inflated balance sheets. From 2010 to 2020, Wirecard reported earnings that did not match its real business activities. These ghostly outside alliances accounted for a sizable portion of the company's declared income. For almost 10 years, Wirecard's financial records were masterpieces in manipulation, allowing the business to fool even seasoned auditors. Years of auditors for Wirecard, Ernst & Young, routinely approved the company's financials without looking closely at the allegedly billions in escrow. The financial illusion created by Wirecard was so strong that it caused an explosive stock price rise and drew well-known investors from all around. The company's value peaked, surpassing that of one of Germany's most venerable financial institutions, Deutsche Bank. But the bigger the lie, the harder it falls. When the Financial Times published yet another shocking story in January 2020, Wirecard started to fall apart. This time, the charges were too severe to overlook. The scrutiny got more intense, and authorities started to pay attention. At last, in June 2020, KPMG, the independent auditors hired to evaluate Wirecard's records, produced a shocking assessment. They could not confirm the existence of the 1.9 billion euros supposedly kept in Philippine banks. The house of cards toppled over. Wirecard had to come clean when the banks themselves verified the money did not exist. The company acknowledged in a press release startling the financial community that money was missing.
The Financial Times suggests that you've routed billions of euros in payments to 34 names through a partner company in Dubai, Al Alam Solutions. According to the FT, more than half of the clients have never heard of Al Alam.
So let me give you a clear statement here. This information is not authentic, how it was presented by the FT. We can completely reject these allegations.
Within days, this disclosure destroyed over 75% of Wirecard's stock value, reducing billions of euros in market capitalization. Having been in charge of Wirecard for almost 2 decades, Markus Braun resigned right away and was arrested not long after. But maybe the most fascinating person in the scandal was Jan Marsalek, the mysterious COO for Wirecard. Having supervised several of the company's dubious foreign operations, Marsalek disappeared following the crisis. He's still a fugitive today. Reports indicate he may be hiding in Russia. His disappearance has simply deepened the mystery around an already compelling financial drama. By the end of June 2020, Wirecard filed for bankruptcy, wreaking havoc along its path. Thousands of staff lost their jobs, and over 3.5 billion euros owing to creditors vanished. Wirecard's fall was total, but the consequences had only started to show. The implosion of Wirecard was a disastrous event for Europe's financial control system, not only the death sentence for one company. How could such a large-scale fraud go unnoticed for so long? Particularly BaFin, Germany's financial watchdog. The function of regulators has come under heavy criticism. BaFin ignored questions expressed by reporters and analysts for years, even looking at whistleblowers and reporters rather than Wirecard itself. EY, too, has come under criticism for helping Wirecard commit fraud. The auditing behemoth neglected to confirm the existence of the billions Wirecard claimed to have and neglected appropriate due investigation. Following the scandal, EY was sued legally and suffered major reputation damage, which resulted in general demands for auditing industry reform. The Wirecard controversy reminds us strongly of the need for more open corporate governance and tougher financial rules. It also underlined the fragility of Europe's fintech sector, which had long aimed to rival the giants of Silicon Valley. The fall of Wirecard was a wake-up call, warning that the fast-paced, unbridled fintech industry may cause the next major financial crisis. Regulators all around Europe and beyond are left debating the lessons from Wirecard's explosive ascent and catastrophic decline as the dust settles. As governments and investors try to stop such a massive fraud from ever occurring again, the consequences of the scandal are still being felt. The narrative of Wirecard serves as a sobering reminder of the perils of unchecked ambition, dishonest accounting, and the unwavering faith we sometimes have in businesses appearing too large to fail. Wirecard did, however, fail, and it did it rather spectacularly. Looking ahead, this scandal will act as a warning story for businesses, authorities, and investors alike. If you enjoyed this deep dive into one of Europe's biggest financial scandals, don't forget to like, subscribe, and hit that notification bell for more stories about the financial world. Leave a comment below with your thoughts. How could Wirecard have fooled so many for so long?